So we call ourselves carbon footprint management solutions. We work with banks primarily, so integrating an API into a bank, and then they provide solutions for their customers. So you can open up your NatWest banking app or your CommBank in Australia, or soon to come somewhere in Japan and maybe through Asia, reaching pretty close to 30 million people now. But yeah, it's just the start. We want to go from 30 million people reaching it, of which maybe 2 million are using it, to 500 million being able to reach it and 100 million using it, and then being able to say that of the 100 million, 80% have changed something in the last month on their carbon.
You have just heard from Ben Gleisner, founder and global CEO at Cogo. Previously in a government role, Ben led the team that created Treasury's Living Standards Framework, and represented Treasury on New Zealand government's international climate change negotiating team. Earlier this year, Ben was recognized as the most impactful entrepreneur at the Pacific Basin Economic Council. So let us dive right in.
Good afternoon, Ben. Welcome to the show. It's great to have you here.
Thank you. Good to be here too.
And we've got the cyclone behind you there in Wellington, a bit of natural disaster.
Yeah, we sometimes say that the world needs to solve things like climate change, and big storms are one of the things that people are starting to go, maybe we shouldn't have so many of these, and maybe I can do something about it. Yeah, it's a good reminder.
In this world that we're in, where ESG has become so popular, the buzzword, you find these people who become ESG experts after maybe taking a 2-week class, and that might be a good case. Now, you spend good 20 years in this space already, more than 10 years as an entrepreneur, so there's lots to talk about. But
Sure.
Before we trace the lineage, let's cover what Cogo does.
Sure thing. Cogo, we help individuals and small businesses to measure and reduce their carbon footprint. So we call ourselves carbon footprint management solutions. We work with banks primarily, so integrating an API into a bank, and then they provide solutions for their customers. So you can open up your NatWest banking app or your CommBank in Australia, or soon to come somewhere in Japan and maybe through Asia. You'll be able to start seeing your carbon footprint and get recommendations around what you can do to reduce it that are personal to you. And if you go to bed sleeping at night thinking you've done a little bit to solve too many more hurricanes and cyclones coming in.
From a going to market perspective, it's mostly B2B2C then?
It's mostly banks that are using it to support their household and individual customer, but we also launched a product at the end of last year working with accounting integration. So Xero is our first sort of integrations. As a small business, you can integrate your accounting information and get the same solutions. But yes, selling to banks who then pass on the service to their retail or SMB customers.
The data that you get, or the type of products that go through with the transactions, quite a bit different on the retail side versus an SMB.
Yeah.
And how does this work, and how do you ultimately measure that?
I think the starting point is, the data quality is a lot easier on a household spending because they're mostly using their credit card or debit card. And over the last 5 or so years, there's been a lot of improvements in the quality of what's called categorization of the data. The banks now know and have third parties that provide them with information, so that when you buy fish and chips, or you buy at a supermarket or a restaurant or a clothing store, they pretty much now know that that is the category of the spending that you're doing. And then how we measure, I suppose, at the moment, we work with partners all through the world, so government agencies and academics, to create what's called an emission factor database. So that's when you spend $1 in Melbourne on a coffee, how much carbon is created for every $1 you spend at a coffee shop, or if you buy electricity or you buy a flight. And so what we do is we have around 600, 700, 800 different categories of emission factors. We basically can say that on average, when you spend $100 at a supermarket, it's so much carbon. $100 on a flight is 5 times more carbon. $100 buying clothes is 10 times less. So it's just giving people that order of magnitude. You do things like understanding when you buy from a supermarket in each country, they have data on what the average person buys in a supermarket. So we don't know that you bought tofu or that you bought a T-bone steak, but we do know, if you tell us you're a vegetarian, we can tell you what the average vegetarian buys, and the emissions from $100 is roughly 20% lower than if you eat meat. If you didn't know, very interesting, because people sometimes think, oh, if I don't eat meat, maybe that will save. But I think it's giving people this information around how relatively important is stopping flying or stopping using my car or driving Ubers all the time compared to my diet, compared to my electricity. And that's what we do.
I was thinking about my bank account largely. My bank doesn't really know much about me, right? There's a salary coming in, there's a credit card bill going out. And for the most part, that's it. And that's pretty problematic if you want to get any type of precision out of it.
Yeah, I think the Japan's slightly anomalous in terms of how banks deal with the customer and the data that the customer has. And in many ways, lots of the credit card companies and different WeChat payment methods, all the different ways, most Western, at least, markets we're currently operating in, which is through the UK, through Western Europe, Australia, New Zealand, about to launch in North America. Most of those markets, you have really your primary bank, and where pretty much the bank issues your credit card. So the bank will be the issuer of the credit card, and the bank manages your everyday spending account. So in many ways, 90% of people's spending sitting in the bank sort of environment. That's probably one thing to note. The other thing to note is with open banking coming more and more, banks are able to pull in the data from credit card or other places, or you might be using a super app that pulls all the data in to one place. And so we can still provide people carbon footprints. But yes, I think Japan does have different relationship people have with banks, where it's just as you say, and everything else is dealt with credit cards. But again, we can work with a credit card company then and give you the data sitting inside your credit card statement.
You alluded to change in behavior when you mentioned not eating meat and the 20% it saves. Now, the whole measuring side is good, but ultimately it doesn't change anything just yet. So there's this nudging aspect. You need to help me really change my behavior and my habits. And that's the difficult part. I can get on the scale every morning and see I'm fat, but unless I go to the gym.
Yeah, I think as you mentioned in the sort of intro, when I was working as an economist inside government on lots of environmental and I guess measuring progress beyond GDP and climate change policies and things, I did a lot of work in the government, but we set up Conscious Consumers as a charity originally in 2010. And from the beginning, it was always about, you can't just give people a measurement of how their sort of spending is sustainability wise. You have to actually get them to change the behavior around it, or at least the thesis we have is if people really understood the impact of their spending, they would definitely want to be shifting it because they would have that information. But the information in itself is not sufficient. You really have to, and since really the beginning of Cogo and formerly Conscious Consumers, we now very much around supporting people to measure and reduce. And I probably think 90% of our focus and what differentiates us from many competitors is that we've spent so many years thinking about how do you design behavioral change effectively models that recognize people for the effort they're making, make it personal, and but also then recommend the next best thing for them to do and reduce all of the barriers around transaction costs of finding suppliers, of incentivizing, of social norming, and you name it. It's just what booking.com does when you go and look up online for a bedroom. They're like, 10 other people are looking at this room and here's a bit of a discount, and they make it super easy. It's just using all those tricks to help you buy things aligned with the values, not sell you some shitty toaster or points for something you didn't want in the first place.
So my comparison with the scale was a bit intentional because obviously when you go into the supermarket, you find products and they have like calorie and ingredients listed. And how far do you think we are away from actually having a carbon footprint listed and then actually also being able to trace this at an SKU level?
Yeah, it's a funny story, but my birthday, 46 years old, a few days ago, and I said to my wife that, my present I want is the many of the apps that we work with. So about 30 million people now have access to our product in banking apps. We still are like having to make an average assumption of like when you bought in a supermarket, what the average vegetarian creates. But for my birthday, we're going to build this like a spreadsheet version of all of the products we're buying. And as I said at the beginning, there's about 600 or 700 different categories in most of the markets we work in. And that does include products like rice or potato or beef. So we do have that level of product information. What we don't have yet is the chicken made from that farm or the chicken made in this farm. And that I believe will come ultimately because regulation is pushing it a bit. Regulators are now saying to large corporates, we need you to report on your carbon footprint of your operations, and the corporate, the large, I don't know, you name it, massive Woolworths store or something, they then go, what's our footprint? And they go, actually, it's in our supply chain, and our supply chain is chicken farms. Same with the large restaurant chains. I do think regulation is going to start pushing down from corporates into those supply chains. That's one reason it will happen. And then the other, I think, is just consumers are going to get hungrier and hungrier, no pun intended, for the information around the stuff. And they will choose to buy products that at least the information's on them rather than one that might sound good, but there's no information. So I think these are the pressures that will come. Oh, and apps like ours will start being like big supermarkets will buy. We've got 2 contracts with supermarkets at the moment where we're exploring supermarket shopping apps that then have this data at the category level. And so then it's like, why wouldn't the best performing tuna manufacturer want to put their tuna as a kilogram of X rather than just a random average? So yeah, it's all about competition. Markets, funnily enough, might save us a bit here.
Sure, you are in quite a few markets around the world already. And so is there a market where you have a higher concentration, where you have already, let's say, 60% of the banks and all the others saying, oh, we need to get on the bandwagon?
It's a good question. It's definitely not Japan. Sorry, Japan, but we'd love more Japanese engagement. There's a couple. Singapore's been actually quite progressive. So DBS has a product that's live, and that's pretty cool. It's still version 1, but that's pretty cool. And we've been chatting to DBS and then OCBC as well. They've partnered, nothing live yet, but it feels like that's 40% of the single market. That's one. Australia is the most advanced. We happen to have globally some of the bigger banks, especially the ones that are more progressive in terms of having a product that all their customers can use. And yeah, Australia, we've got CommBank, which is 6 million of the 16 to 17, so like million in Australia, plus Westpac. We've announced a partnership with them, and we've got Suncorp as a customer with about 1 million customers. So Australia penetration in the next few months will be more than half of the population. But that's only been in the last few months. So NatWest we launched with about 14 months ago. That was the first time a bank had done this with all of their customers able to use it. Obviously, not everyone has, but it is getting up there in NatWest. They announced in the first 9 months, 300,000 people were using it, which is about 6% of their whole customer base. So pretty good result, and it's gone up since then. So yeah, it's starting. It's just still early days.
In terms of the behavioral science aspects and the gamification, if you have your whole customer base on it, it makes for much more optionality in terms of rankings and if your family group and competitions in there.
Exactly. 20,000 other people at NatWest have chosen to purchase a heat pump or EV. They're saving this much carbon, join them, and or whatever, like so many different things. So yes, although I think even NatWest are really happy that they're getting whatever, close to 10%. That's still a really big, and I guess we were all wondering around the world, is this something that still is like a few fringe groups that are shouting about it, or is there an appetite for people to actually start measuring and managing? And NatWest to us was a great sign from them in terms of just the level of interest from people, and 35% of the users are engaging in these actions to reduce. So again, still early days and there's not a lot of pressure and gamification as you're describing yet, but even the fact that 35% have taken some action to reduce, and obviously it's starting to add up, and we'll start publishing reports on how much impact they're having, how much savings they're making, what sort of savings, but it's still early days at the moment.
First step is really having the data available when you need it, right? Because our electricity bill, we get the comparison prior month, prior year. And so this is now 3,000 yen more than last year. So was it colder? Did we heat more? Did we do something else? And so I'm not allowed to take a hot shower for 2 days and for my wife. But if you don't have that data at your fingertips, then you're flying blind.
Exactly. You can't manage what you can't measure, they say. And that's true, but also you don't necessarily manage it, even if you measure it. It's not just simply give someone a number and they'll do something about it.
How does this work for the banks themselves and their reporting? That's for the NatWest case. So if you have customers that are using the bank, does their behavior count in some way into your balance?
The bank is really not only the right way to start from a channel perspective for reaching lots of people. So we had, 40-odd thousand people using our consumer app at the beginning when we first launched it, and people, that was over 3-4 years of growing up the users. I think NatWest in 2 weeks had got the same number of people using their feature. So it was like just a great example of the scale of banks bring you, but also banks with the regulations that are coming on. Still early, the regulations called the TCFD regulations coming out of the G20. And it's basically saying, look, banks, you need to be managing risk really around two things. One, the impact of climate change. So more storms, more businesses that you lend money to going under because their maize crops are being destroyed by whatever. So there's the risks of the impact of climate change, and the banks have to be focusing on that. That's not what we focus on. The second risk, though, is what's called transition risk. And so the banks are now being required by regulators to measure the exposure they have around the carbon intensity and the carbon use of their customers. If prices of carbon go up and if the demand from the market is moving away from carbon, how are they ensuring that even their mortgage book, the households, aren't using lots of carbon, or the businesses they lend to aren't keeping on driving and building new factories or buying new fleets of cars that are carbon intensive, because that's a risk for them as a bank. So yes, the answer is it's still early. And I was talking to my team about it this morning, very much so, around how do our products also support in terms of the outputs, in terms of data insights, how can they be used to help a bank both respond on regulation, but also act to get their customers transitioning. And so there's a beautiful, because we have customer facing products, we're not just a back office analytic machine, we're actually a customer facing one as well. And so, yeah, that's a big part of our company's growth plans.
Now, on the commercial banking side, it's clear there are the green loans that have certain targets with them. And if you meet the targets, you get a lower interest rate. So what you just said, I was wondering whether there's a future as a consumer banking customer. Will I get fired from the bank because my carbon footprint is too high, or I get less interest on my deposits, or whatever it might be?
I think that definitely you'll find there's a lot of lending. So one of the core levers the bank has. So say we run some analysis and tell them, look, here's how much carbon footprint your mortgage book is creating, so all the households, or here's some data on your small businesses and the lending. One of the questions the bank goes is, oh no, we've got to reduce this down. We've committed to regulators or whatever that we're trying to support net zero 2050 or something. And you know what? In the last 3 years, everyone's going up, not down. So the big lever they have is lending. So the big thing they can do is then set up like green loans for your house and reducing an interest rate. So I think that's the one big thing they'll start doing, which is helping you as a customer of theirs lower your carbon footprint. But in terms of like negative and disincentive, or I guess in some ways the bank can choose not to keep lending money to you, as banks are around the world, if they think that you're exposing them to risk. So yeah, I guess you might be told, look, you're still driving around that crazy, really petrol intensive car. Because of carbon pricing, that petrol is going to be 10 times more expensive. Are you sure you want to buy the next model again? And we might not lend money to you to do it. So I suppose that's the way they might do it, I'd say. I don't know if they kick you out as a customer, but maybe.
How about your branding, given that you're indirectly selling to the consumer? So NetWest is your client, but does the NetWest client know maybe there's a Cogo logo?
There is Cogo, yep.
But generally, the population doesn't know Cogo as a brand just yet. So is there something in the future where it becomes a direct-to-consumer brand as well?
That's where we started. So obviously we were originally a direct-to-consumer brand, and that's where we were initially focused. I think it is fair to say that in the NatWest and CommBank and Westpac and all these different banks' experiences, Cogo is mentioned. So Cogo is very much like we're partnering with Cogo to do this. So I think that's one way to say that we are happy that's referenced, and we add credibility to the bank for that reason. But then again, if banks don't move fast enough and we see just still lots of talk and not much action, we have the opportunity to push the app that we've got in the UK. So right now we do have a direct-to-consumer brand. It's pretty under the radar in the UK, called Cogo, that you can use our app and you can download it and integrate any one of 50 banks' data into our app using open banking. But the reality is it's just a very expensive way of growing a business, and it doesn't make much money. And so I think we will go there in the end if we don't see enough action, but there is the ultimate challenge of monetize and business model build.
So in addition to the banks, you also mentioned the supermarkets. And who else would be a target industry for you?
Yeah, I definitely think if you look at really the areas of your spending, sports a big one, but it's a bit more lumpy. Maybe the public transport operators want to give you a pat on the back and tell you how much carbon you're saving by using public transport. So we're definitely talking to a few of those. But I think, yeah, supermarket, your food is a big one. It's probably a quarter of an average, maybe a third if you don't have a lot of money, but say a quarter of your carbon footprint comes from the food you buy. So that feels like a logical one. And then again, with energy and things that you use around your house, it's just a little bit of a different product, because at least with the supermarket, you can see the products you buy where energy is all around your use and the efficiency of it and things that are a bit more invisible. Obviously, you can buy like insulation and you can buy a few things, but they're more lumpy one-off items. Insurance, another one. Insurance, people and companies are like, can you help as people renew insurance? Can we support them to think about carbon in that context? And then investments is one area that a lot of people talk about, which is my everyday spending is one thing, but what about all my investments? And I suppose that's, yeah, there's just so many areas, but we're definitely focusing for now on banking data. Has got a lot of richness that can be used, and there's not enough behavior change happening in that area.
So let's go back to the beginning. As I started off, you really early in this space through your studies in the first place, but then also starting the company, The Conscious Consumer, in 2010. That was really, for many people, not necessarily top of mind at that point. So you left a good government job with the Treasury as an economist and becoming an entrepreneur. What was the motivation that drove you to it?
As I said, the master's was on carbon offsetting and carbon markets. So my thesis, you can read it. It's on my LinkedIn if you want to connect. So I did a lot of work in the academic field around that. And then in government, I just found working on the UN climate negotiating team for New Zealand or helping to support the emissions trading scheme work. It's very slow. And the last thing I did at government, which I was definitely happy about, was a framework on well-being and how we measure progress beyond GDP. And that is now being used by the government here as a sort of cornerstone thing. So I feel like it was good, but it just like 12 years later, they're still talking about it, and that's seen as success. So I was like, nah, we've got to get out of government. We're flying around the world causing more climate change than we're solving at the UN. Let's set up a startup called Conscious Consumers, in 2010. And that idea was pretty much the same idea now, which is how do you give people information to help them make more efficient, actually? Because from a market perspective, markets are supposed to have perfect information. And so you're supposed to know everything about the products you buy and optimally choose a product and service set that matches your values, really. And that just doesn't happen. So the thesis was still the same as it is now. And we're a charity for the first 6 years and got funded by various government and nonprofit. It really became something in 2016 when we started integrating financial data. And we were like, as soon as you started seeing all the data coming together, rather than people just having to scan QR codes to show they'd been places, that was the aha moment where we were like, why don't we become a company and raise money and grow and make it not just about 3,000 people seeing something, but 3 million and 30 million and 300 million. So yeah, we're on that journey now, and carbon's the real focus, but it's not the only thing. In the future, we'd like to tell you how much plastic your footprint is when you walk out of a supermarket, or tell you how much you're supporting people that are paid a living wage, and whatever it is, all the different issues, which was called sustainability, now called ESG. They both didn't have very good reps as names, and maybe we don't need a name for it in the end, and we just call it your impact.
And so even in 2016, venture capital is also like a herd mentality, right? If you come now, probably have an easy conversation, but what did this look like in 2016 to try and go out and raise funding?
Well, yeah, we've actually haven't raised any money yet from institutional venture capitalist model, where we've been raising money from private individuals and family offices. And New Zealand government has invested in us, for example. So there's a few sort of, it's non-traditional. And we're also quite committed, as you'll read about us on various things, but committed to the decentralization of the ownership of the company. So, for example, more than half of our staff own shares in the company. We definitely would like this company not to be, and it isn't, it's owned by 260 people at the moment, but we'd love it to be owned by 260,000. So we'd love all of the customers that use the products to be able to have a chance to own it. You just see such large amounts. So we've been basically raising money off individuals and family offices for the last 6 years. And what in the more traditional model is, venture capital comes in, 3 or 4 of them end up owning 80% of it. And that's where the value is created. And so the company goes from being worth 10 million to 100 million or 20 billion or whatever it is. And then it's put on the public stock market, and that's when everybody else can have a chance. So we don't really like that model. We don't think it's aligned with the values. So yeah, hopefully someday soon you can actually not just use Cogo, but you can invest in it and help build it and benefit it from it.
So it's a bit more of a cooperative spirit.
It is trying. I guess we would like it to be, yes, we love the competition, we love capital market. There's nothing about those things we don't like, but we do think it's the distribution of the value of companies should be more aligned with the people creating the value, which in our case is the customers and the banks that use it. And it's just hard regulatory. The mechanism to do that is like crowdfunding campaigns, but they limit how much you can raise and stuff. But we are actively interested in like, how do we raise money in sort of non-traditional ways?
That's a pretty amazing journey then. How many countries and how many people?
There's a staff around 125 staff now, and they are based in 12 countries around the world. It's the sort of like team all through Asia, Australasia, Europe, and in the States. Customer wise, yeah, the thing I said, we've got about 14 large bank customers, lots of sort of small, innovative neobank conversations and pilots. But yeah, of the big banks, and of those, just under half of them have got a product that's reaching all their customers. So reaching pretty close to 30 million people now. But yeah, it's just the start. We want to go from 30 million people reaching it, of which maybe 2 million are using it, to 500 million being able to reach it and 100 million using it. And then be able to say that of the 100 million, 80% have changed something in the last month on their carbon. That's success for us. And ultimately it's success for the banks, it's success for the world, it's success for financial return. If you can help connect you to a solar panel company, that might be the thing we recommend. So I think there's a whole lot of ways of creating value and also impact.
That's a great vision to end up with. I don't really want to add anything to it.
Good.
Thanks very much, Ben. It was a great conversation. Really appreciate it. And as you said, like even Australia, the last 14 months changed the trajectory. So you're at this point in the S curve where it's really taking off.
Yeah, we hope so. Lots of talk, as you say. In the end, we want to just be measured by the actual impact we've had. We'll say we can lead you right down the path, but individuals ultimately have to make the choice. So we'll do what we can to make it an easy one, but it'll be up to all of you listening to do the change yourself.
Wonderful. We'll start chopping away on that.
Great.
Super. Thank you very much.
Yeah, we'll see you in Tokyo when we're next over the way.